Welcome to Voyage Daily Tech, the most important news personalized for you every day, supported by Voyage.com.
All right, we have 5 major tech stories for you today. First up, an AI firm just made a stunning $9 billion move on a crypto miner, and it reveals the real prize in the AI gold rush isn't code, it's electricity. Then we'll look at Twitter co-founder Jack Dorsey's radical new messaging app that, works entirely without the internet. After that, we'll cover how a dramatic policy shift at the SEC is set to unleash a flood of new crypto ETFs for everything from Solana to meme coins. Our fourth story is about an AI startup named Groq making a lightning-fast play for NVIDIA's market share. And finally, we'll wrap up with tech giant Samsung, whose profits have plunged after failing to deliver crucial AI memory chips to NVIDIA. In a stunning reversal, crypto miner Core Scientific, which just last month rejected a buyout offer from AI firm CoreWeave, today announced it's being acquired by that very same company. CoreWeave is buying Core Scientific in an all-stock deal valued at a staggering $9 billion. This isn't just a corporate takeover. It's a high-stakes power grab at the center of the AI gold rush. The prize isn't crypto, it's electricity. Bitcoin miners spent years building massive, energy-intensive data centers. Now, AI companies are realizing that infrastructure is the perfect fuel for their own explosive growth. With this deal, CoreWeave gets full control of Core Scientific's entire 1.3 gigawatts of contracted power, a critical asset when, as one analyst put it, power remains the biggest constraint for AI data center expansion. This is where the situation takes a more complex turn. The company being acquired for $9 billion, Core Scientific, just emerged from bankruptcy at the beginning of this year after being crushed by a crypto downturn. This deal marks one of the most dramatic turnarounds imaginable, highlighting the sheer velocity of the AI boom. It's a strategic pivot for both sides. CoreWeave itself was founded as a crypto miner before ditching it to go all in on AI, where its revenue grew more than 8-fold last year. For them, this acquisition does more than just secure land and power. It instantly eliminates over $10 billion in future lease payments. The infrastructure built for one digital revolution is now being consumed to power the next. This deal doesn't just set a new bar for the industry. It sends a clear signal that as the AI arms race accelerates, anyone sitting on a critical resource could be the next target in the global hunt for power. While the giants are fighting over the physical infrastructure powering AI, our next story is about a different kind of revolution, one that aims to bypass digital infrastructure altogether. Twitter co-founder Jack Dorsey just launched a messaging app with a feature that should make every tech giant nervous. It requires zero internet. The new app, called Bitchat, works entirely over Bluetooth. It needs no Wi-Fi, no cell service, no central servers, no phone numbers, and no emails. It is a completely off-grid communication tool. So the thing is, Bitchat turns nearby phones into a decentralized mesh network. Messages are encrypted and passed directly from device to device, hopping between users to extend their range. They are stored only on your phone and disappear by default. While companies like Meta are building digital empires on your personal data, Bitchat is designed to collect none of it. But this isn't just a novelty. The technology is almost identical to the Bluetooth-based apps used by protesters in Hong Kong to organize and communicate when the internet was being monitored or shut down. This is about creating a censorship-resistant channel that authorities can't easily block. This decision places the app in direct opposition to the entire business model of mainstream platforms like WhatsApp and Messenger. Dorsey isn't just building an app, he's building a potential escape route from the very platforms he helped create. It suggests that in an era of constant surveillance, the most revolutionary technology might just be the one that helps you communicate completely offline. Speaking of challenging the establishment, the world of decentralized finance is about to go surprisingly mainstream. The floodgates are opening for crypto funds, and we're not just talking about the big names. The US SEC is now paving the way for ETFs linked to everything from Solana and XRP to, believe it or not, a President Donald Trump themed meme coin. This isn't a slow trickle, it's a tidal wave, all thanks to what sources are calling a dramatic shift under new Republican leadership at the SEC. The agency is not only drafting new rules, but has reportedly paused or even walked away from high-profile enforcement cases it was expected to win. The goal is to streamline the entire system. One change could slash the time it takes to launch a new crypto fund from as long as 240 days down to just 75. An executive familiar with the talk says a new general filing template could be submitted by exchanges within days or weeks. This has the industry buzzing. As one chief investment officer put it, the most interesting and important thing about this guidance is that it exists. It signals that crypto ETFs are officially going mainstream and the race for market share is about to become ferocious. And some aren't even waiting for the starting gun. One firm, REX Financial, just used a complex workaround to launch the first US ETF with exposure to Solana, leapfrogging competitors, still waiting for the rules to be finalized. Their goal was to get a head start, and it worked, pulling in $12 million in assets on its very first day. With dozens of applications now in the queue, from serious projects to pure meme coins, the entire industry is holding its breath to see what gets the green light next. And while one gold rush is heating up in crypto finance, the original AI gold rush, the one for Siliconis, seeing a new challenger emerge at an incredible speed. An AI company decided to build a new European data center just 4 weeks ago. Today, they are already unloading server racks into the facility and expect to be serving live traffic by the end of the week. This isn't a tech giant like Google or Amazon. It's a $2.8 billion startup named Groq, and it's making a direct play for a piece of NVIDIA's AI kingdom. But this isn't a head-on assault. It's a much more calculated strike. While NVIDIA has a stranglehold on the high-margin chips used for training massive AI models, Groq is targeting a different battleground, Inference. That's the high-volume, everyday work of running AI applications like the answers you get from a chatbot. Groq's edge, according to its CEO, Jonathan Ross, is that its language processing units, or LPUs, don't rely on the same expensive, hard-to-get components like high-bandwidth memory that have limited NVIDIA's supply. Groq's supply chain is based in North America, allowing them to build and deploy at incredible speed. In a statement that was both a challenge and a masterclass in corporate judo, Ross said, "We're not as supply limited." And the reason that we're so good for NVIDIA shareholders is we're happy to take that high volume but lower margin business and let others focus on the high margin training. This is a classic flank attack. Groq isn't trying to build a better version of NVIDIA's flagship product. It's carving out a new territory where its strength, speed, and availability are the winning factors. By partnering with data center giant Equinix in Finland, they're planting a flag right in Europe, a region pushing for its own sovereign AI. Groq's move demonstrates that the first real challenge to NVIDIA's dominance might not be a head-on assault, but a swift strategic raid on its flanks. Groq's success story is all about speed and seizing opportunity. On the flip side of that, however, our final story is about a tech giant stumbling precisely because it failed to deliver in that very same market. Samsung's profits just fell off a cliff, plunging an estimated 39% in a single quarter. This isn't just a bad number, it's the company's lowest income in 6 quarters, a bombshell that has investors deeply concerned. The reason? In the middle of an unprecedented AI gold rush, the tech giant is failing to deliver the one thing that matters most: advanced memory chips for the undisputed king of AI, NVIDIA. While smaller rivals like SK Hynix and Micron are cashing in, Samsung is stuck on the sidelines. Its cutting-edge chips reportedly moving too slowly through NVIDIA's critical certification process. However, if you zoom out, you'll see another layer of complexity adding to the pressure. Analysts are now saying it's unlikely Samsung will ship any significant volume of its latest AI chips to NVIDIA this year. This delay has turned into a massive win for its competitors, who are seizing the market share. Samsung is leaving on the table. The pressure isn't just coming from inside the tech world, it's coming from geopolitics. Samsung is also caught in the crossfire of US trade policy. Restrictions on selling advanced chips in China are already hitting its bottom line. Now, it faces the looming threat of new tariffs on smartphones and, even more critically, the possibility of the US revoking authorizations that allow it to use American technology at its plants in China. The result of this perfect storm of internal fumbles and external threats is a brutal verdict from the market. Despite a rising stock market, Samsung is now the single worst performing stock among all major memory chip makers this year. The giant is clearly stumbling, and the market is now watching to see if it can recover its footing before being left behind for good.
That's it for today on Voyage Daily Tech. Follow, share, and stay tuned for daily updates coming your way tomorrow.